Righto, Money Miners, here we go. What are we? Wednesday. Mate, what do we got today, boys? A couple of bloody gold halfies. JD, you've gone balls deep into Iluka.
I have, but we're going to start with an interesting snippet from Phil King, Regal's Phil King. This is a bit of a call out. We're going to play some snippets from him. What else have we got, Matty? You touched on Mt Gibson.
No, I did not.
I did.
You did.
But I also went
Thanks
deep.
for doing that for me, Trav.
I went deep on a company that isn't listed on the ASX, but has really piqued our interest because it's just a fascinating case study on what not to do if you're building a mine, and it's Horizonte Minerals.
Going to Brazil.
And a couple of ex-guests on the potty now getting involved in Horizonte by obligation, would you say?
Yeah, probably. They probably
I
had
want
to put
my
their
money
hands up.
back. What else you got? That's about it, eh?
Silver Lake and St. Barb's as well. A couple of goldies.
The gold halfies, yeah, mate. Bloody brilliant stuff, riveting stuff, mate. Mate, there's been another business expansion actually on the back of this show, believe it or not.
Tell us about
Do
it.
you know what it is?
I'm all ears, mate. I'm all ears.
Mate, SMEC, they've had to put in another workshop.
The SMEC Power and Technology.
SMEC Power and Technology, mate. They're going to have 4,000 square metres of undercover workshop throughout the business, mate. Talk about companies that can act quick on, like, a couple of ads and everything, and then just start banging up sheds.
This is the Matt Michael marketing effect.
Yeah,
They're
talk
just
about had a bit of
responding,
money of mine advertising.
responding to demand from our
sorry.
ads.
I won't. It's not like I'm going to cover the interest on the loans for it, but mate, this is what's happened.
Matty, other than our advertising, why are they expanding,
Well,
mate?
mate, I'd say the inquiries and everything for the variable speed drives and vent-on-demand systems for the secondary vent, underground mining, tunnelling, they're going through the roof, and because, like, mate, they're just a must-have. Like, it's very similar to the DSI thing. Like, not having that SMEC VSD and vent-on-demand system in your mine, in my view, it probably can make a company uninvestable. Like that's a trigger. Like, bloody hell, it's like it saves money, saves you shitloads of power, bloody. It's the next step towards a greener world, mate. Get a bloody SMEC VSD and just end event on demand. Don't put your trading multiple at risk. Like, it'd be stupid. Like, mate, yeah, Westgold harping on about their free cash flow generation and tidy bank balance, but
That came about from...
we know for a fact they would not have that cash if SMEC wasn't their electrical business partner.
Saved costs.
Mate, they'd be probably up to their eyeballs in debt, probably bloody talking to administrators if SMEC wasn't involved. Like,
That probably is a stretch, but
it is
would help.
simple as that.
So if you want free money, give SMEC
If you want to stay out of admin, get SMEC involved in your bloody company, mate.
Give yourself a free bonus.
Mate, Trav, you're a Kalgoorlie boy. You would have heard of Goldfields Rewinds in Cal. Mate, they're actually a subsidiary of SMEC.
There you go. I
Mate,
know that. Yeah.
Go-to centre in Kalgoorlie for anything electrical motors. Mate, motor rewinds, overhauls, secondary vent fan overhauls. Mate, call out vehicles if an electric motor shits itself. Again, a full turnkey electrical solution for bloody ventilation, electricity, anything.
We love
for
turnkey
bloody,
solutions.
mate, all right, we only accept turnkey solutions. SMEC, Goldfields Rewinds, expanding, getting huge. Mate, it's bloody brilliant. Now, we've got a testimonial in. You got to get listener feedback and everything.
Yeah.
This was actually for someone that flew on a Brooks Airways flight up north. Check this testimonial from Andrew Rinehart. Mate, the Brooks pilots are that skilled, they can drop those back wheels on two separate pieces of cow shit anywhere in the arsehole of Western Australia. Mate, look at that testimonial. Mate, we told Brooks they're safe, but geez, they can bloody fly well too. Bloody great customer feedback there from
Andrew.
5-star.
Andrew Rinehart.
Where did you get that one from?
I don't know, some bloody...
Andrew.
Product reviews or
Yeah, something like that. Mate, Brooks Airways, the new force in FIFO travel, lads. It's as simple as that. They'll bloody fly anywhere. And remember, the shit of the runway, the better for Brooks. They love them. Shit of the better. Mate, they fly all over the shop. They actually fly up to Mt Gibson, who we're talking about today.
Coolin Island.
Mate, Walloona, Meekatharra, Leinster, the Pilbara. They can go as far as Broome, Marble Bar, Kununurra. Speaking of the bloody arsehole of Australia, WA1, mate, get Brooks to take you out to Westerunter. They'll go anywhere. They're pumped, mate. The King Air, if you're rich as fuck, you can get the Learjet, comfortable seating and Alaskan-style air conditioning in the Brooks terminal. It's, mate, just get Brooks on your runways ASAP. It's simple as that. And then when you get home, you can bloody get whatever you want to build shit on your property and cart dirt and whatever you want for DIY with Brooks Hire and Brooks Equipment. Mate, what a bloody mob. Can these companies do anything more for the country? Like, far out.
No.
Unbelievable.
I'm looking at that Learjet, mate, and I reckon I know a bloke who would use those Learjets pretty damn regularly.
Is that right?
Well, actually, maybe not, because he's
Andrew
apparently.
Rinehart?
I was trying to segue to Phil King, but
Mate, Mr. King, Mr. Regal.
oh, jeez.
Trav, what's going on with Mr. King?
Well, Phil King, I mean, I was listening to a podcast yesterday with the mighty Phil King. Not sure if you guys have ever heard of him before. Have you heard of Phil?
I heard he's probably got a good car and a good house.
What do you know about Phil King, JD?
I know he is the founder of Regal Funds Management, and he runs the show there.
Yeah, to the money miners that don't know Phil, you definitely know Regal. Everyone bloody knows Regal. Massive influence on ASX equity markets, and Phil King might even be the king of the ASX. I've heard people call him. I've also heard people call him brokers, call him PK. So anyway.
Shout out to Paul Klein, my mate. He's also a PK. Regal would have to be the most named company on Hot Copper, I'd reckon.
Yeah. It's always a positive comment. They love it. Everyone loves Regal. Anyway, Phil King, or PK, he did an interview on Inside the Rope with David Clark that I listened to yesterday, and given how much influence PK has on the Aussie equity market via Regal, I always want to listen to what he has to say. And I had 3 big takeaways listening to the interview. I'll play just a few snippets of the highlights for you guys and for the money miners as I talk through these. But my first takeaway was that Phil reckons smaller companies and emerging companies are going to outperform larger companies over the next 5 years. I find that interesting.
Yep, that's one we've heard before and a lot of funds angling for. They've started all these small and mid-cap funds.
Yep. The second one is on the IPO window, and this is what Phil has to say.
So is the IPO window going to open again this year, do you think?
I don't think the IPO window will open for a while. Don't tell all my broker friends, but I think it's well and truly shut for a long time. But let's just keep that between ourselves.
Okay.
And that's pretty interesting, right? IPO window's closed for a long time.
Yeah, I mean, on the back of 2023, which I think was the lowest amount of IPOs in a couple decades.
Yeah. And the third big takeaway I had is that Phil King reckons that we are at the start of a multi-year bull market in resources. Let's hear it from him.
We're very excited about resources. We think we're in the start of a multi-year bull market in resources. And, we're bullish resources. We think there's been a huge underinvestment. At the same time, we're seeing structural changes in the demand for various commodities. And so for many reasons, I think we'll see resources outperform.
Pretty interesting, right? I want to hone in on some more commentary relating to the mining and commodities kind of world, because that's clearly our focus. And he really talks about the influence of China and the slowdown there as it relates to iron ore and the likes.
And Phil, you talked about your position or thinking about resources as being at the early stages of a good growth cycle there. China being soft and having muted growth doesn't concern you?
China's a big concern, and I've been talking about the slowdown in China for actually a few years now. I've just described China property specifically as one of the biggest bubbles in the market. In fact, I said it was a bigger bubble than Bitcoin, and certainly has collapsed a lot more than Bitcoin has. But the real surprising thing about Chinese property, and certainly for Australia, is the fact that iron ore prices have held up so well, and it seems like the Chinese steel production that previously got put into the property sector has just been exported, and it certainly seems that maybe the Indian steel producers have stepped up a bit as well. And so that's the big surprise for Australia, is just how well iron ore prices have held up. Look, the Chinese economy looks pretty sick at the moment. Property has collapsed, and that's been the big driver of the Chinese economy.
Pretty interesting, right? And then we rounded out just he touches on critical minerals there, the old battery metal space, and I thought he had some pretty interesting perspectives there.
critical minerals and anything into the EV space. Is that an area that Regal's been very bullish on, or how are you viewing that? Obviously, lithium's had a bumpy ride of late. What's the view at Regal in that area?
Yeah, we're still positive on battery metals longer term, but certainly, as you say, I'd say not only has it been a bumpy ride for lithium, it's been an absolute train crash. And so, yeah, that's probably surprised many people. And certainly it's put a lot of companies under a lot of pressure in the listed market. And that's something that we're very, very focused on. We do think that, in the longer term, there's going to be strong demand for battery metals, but it's just one of those situations where supply grew a lot faster than expected and faster than demand over a short period of time. So, yeah, we haven't had much exposure to lithium for a while, which has been very fortunate.
So, but I mean, it's pretty interesting, right? Because I mean, Regal's got a massive influence on the mining equities. They they cornerstone a lot of equity raises and the likes. I found that commentary pretty interesting. What do you guys think?
Couldn't agree more. Regal's impact on not just resources but the ASX as a whole's, the influence can't be understated. They've got an enormous amount of funds under management with the recent acquisitions that they've done, and it's fascinating to hear specifically the China point. That's one he's spoken about at length for quite a while now. I think he touched on it a few years there. I've certainly heard an interview he did over a year or so ago speaking about the interest in China, and he must have tuned into our show yesterday as well, talking about the growth of India. But I think it's just fascinating to hear what someone with such influence on the market thinks.
I think it's interesting their resource long short fund. I think it started a few years ago. I think it's been like 30% per annum since inception. So, and then with that much and a lot of funds under management as well, that's obviously only one small piece of the Regal pie. But it's just, as you said, it just shows how active they are in the market. They're the first call and the last call. They're the last call if they can't get a raise over the line, and they'll chip in for that. But obviously that builds the relationship to get the good deal. So they invest in a lot of exploration to get exploration going. So they're a big player in what happens in mining. So, mate, always very interesting to hear these guys talk because you don't hear too much from them.
Mate, I reckon we'd love to peel some more of Phil's views on the market and the mining world. I think in person, wouldn't we? We'd love to interview him.
Don't be too desperate, Trav. He'll come to us when he's ready. He knows a good deal when he sees it.
I reckon we should interview him. In fact, I reckon the money. If you know PK Money Miners, send him a text. Pull out your phone, send him a text, and just say, PK, you got to do Money of Mine. And look, fair bump. Some of the stupidly wealthy Sydney elite think it's important to be interviewed by someone wearing a suit. Well, that might be an issue with you, Matty. I don't know about JD and I.
I'm not putting a bloody suit on.
But mate, Philly's not one of those people. All right, he's a grounded guy. Here's what he had to say about appearances on the podcast, just so you're comfortable not wearing shoes when we interview him.
I guess the things that are important to me are certainly not those things about how you dress and what sort of car you drive. And I'm a bit embarrassed to say that someone thought I needed a new pair of shoes.
There you go. Mate, I fit the criteria. you want to come? I see he's a very busy man, mate. If you're going to do potties, I just suggest you do it on one where you get a high view to time return.
Yeah,
it's ours. But mate, I'm not going to bloody beg him. Just give us a buzz if you want to come on. I'll see if I can fit you in. And so simple as that.
If you're texting PK to tell him to come on, let him know you only heard about his podcast on Inside the Road because you heard it on Money of Mine. Just make sure you let him know that one, all right?
Won't hold me bloody breath. Right, Trav, your little bloody deep dive, Horizonte Minerals.
Mate.
What is going on here? Caught your attention late yesterday.
Yeah, it sure did, and it's a stock that a lot of our audience may never have heard of, but the story is absolutely worthwhile paying attention to. It's a case study of how construction cost blowout can go horribly wrong for shareholders. Horizonte Minerals is developing, I'm going to say this wrong, so bear with me, a Aragua nickel project in Brazil. How would you pronounce that one?
Yeah, that.
JD?
Aragua.
Let's go with yours.
The Aragua nickel project in Brazil.
Well, bloody Araxa is Eurasia in Brazil,
yeah.
So what hope have we got?
Guaranteed to say it wrong. Anyway, it's a laterite project, and it's a bloody big one at that. First of all, just take a look at this share price chart. That looks utterly horrible. The stock's down 98% in just the last 7 months.
Looks like a bloody continental shelf. It's like when you go out and she drops to 400 metres, dude.
Genuine cliff face. So it's 98% in just the last 7 months, and I can't even fathom that, to be honest. And consider this: they've spent US $479 million already in construction on the project. That's real money in the ground. And yet, when you look at a screenshot of that price chart, look at the market cap Google puts there in the of the company, a mere £9 million. Yet they've spent $479 million US dollars. Like, you're probably wondering, how the hell can that happen, right? And of course, the answer is a combination of horrible cost management and debt. And let me take you on a journey, because in 2022, it was all systems go for Horizonte. On the 16th of March that year, they declared that they were fully funded, our favourite words, to develop the Iragua project with their senior debt facility had just closed. I'm going to rattle off the constituent parts of their entire funding package, because there are some layers to this. And in US dollars, we have $200 million senior debt to a syndicate of commercial lenders, being BNP Paribas, ING, Natixis, SocGen, SEK, and Swedish Export Credit. $146 million senior debt from 2 Scandinavian export credit agencies, being EKF and Finerva. A $25 million cost overrun facility to the private equity group Orion, $65 million in convertible loan notes to Orion, and also La Mancha, former guest of the show.
Oh.
Remember La Mancha? I remember La Mancha. And $197 million equity raise, where La Mancha and Orion led the way there, and $25 million royalty finance to Orion. So just look at the use of funds back then too. They were so prudent. You break it out. They've even got this, contingency there. So prudent of them. It was all looking rosy, right? And then later in October of the same year, they topped up with $80 million more in equity, despite being fully funded only 6 months earlier. But
first red flag.
2023 is the period to pay attention to, right? Because Horizonte are in construction mode then. They're building the mine, debt facilities, they're drawing them down. They're providing lots of pictorial updates to the market on construction, lots of pictures. And some of these pictures from June last year are pretty wild and give you an idea of how bloody big this thing is. Like, it's just massive, massive, massive construction there, you can see. And here's the absolutely baffling thing to me. The company reaffirms that the project remains on schedule for production in the first quarter of 2024 and on budget. And that announcement was in April 2023.
Let me guess. There's an update coming.
There is, mate. There is.
Is that Q1 of the financial year? Or is that
calendar
literally-
year. Calendar year.
Yeah.
So in the last month and a bit?
Yeah, that's when they're expected to be producing. Was in this quarter of this year is when production was supposed to be expected, if you went back in time and looked at their guidance. On the 3rd of August that last year as well, they again come out with a construction update, and they continue to make good progress with first metal production on schedule for Q1 2024. They're doubling down. They must be confident here. They're just reaffirming the market. Everything's going rosy. It's the announcement released on the 2nd of October that sees the stock plummet 85% over the next 2 days. And it turns out that things were not as they seemed. Surprise, surprise. They admitted that capex is blown out by 35% plus, and first production is now not expected until Q3 2023. Shit. They've engaged a specialist to compile a review of cost to complete. And this is a big bloody deal, because if there's ever a time that you don't want to run out of money, it's here. It's at this point in time when you're constructing. You don't want to cost blow out, especially because they'd already drawn down a bunch of their senior debt. So, it's a matter of actually restructuring your entire debt thing. What does that mean for equity? How much more equity do you need? It's a horrendous situation to be in, and there's no excuse for it to be as drastic as it eventuated. But
especially when you're in nickel at the end of last year.
Yeah, far from a tailwind.
Yeah. So they're in disaster repair mode, right? Another update is provided 3 weeks later, filled with more pictures of progress. Like, side note on this story, I think it's a fucking massive red flag when all your updates in construction are filled with pretty pictures of progress, but not the dollars spent, not how many dollars in trade payables you've got, not the percentage complete in your different work streams. I just think those are the numbers that really, really matter, the funding dynamics through that period, and how far along construction you really are, not of just certain work streams, but the entire picture.
So what do you reckons? What are you putting your finger on as, I guess, a cause of this, Ricardinho?
Well, mate, bear with me here, because by the end of November, it appears that major shareholders have realised that biggest fucking problem: poor management. Right?
Oh, there's a reason.
The CEO, Jeremy Martin, has finally been given the boot alongside CFO Simon Redder. Of course, it's worded as stepping down, but we know how this works. And so they should be booted. Like, it's appalling that you can mismanage costs so horrendously and communicate that mismanagement so poorly until it's too late. And along with them, 2 non-exec directors also stepped down. And look who has look in the announcement. Look who takes the reins as interim CEO, Karim Nasser. Remember this guy, fellas?
La Mancha.
Sure
do.
do.
We interviewed him. He came on the podcast. Karim, of course, heads up La Mancha Resource Fund to take the role of interim CEO of Horizonte. He had to rescue him. He actually had to be appointed in this role at Horizonte. He had to recuse himself of his duties and decision making at La Mancha in relation to the company.
Which is, I'm
the
sure,
conflict.
what he really wanted to do.
Yeah, and Horizonte,
Jesus.
like at this point in time, they're still fast running out of cash, and a lot of their money has been, committed to capital works, which have to continue. There are all these contractual arrangements, so things are dire, and the spending still has to continue, even though they've changed management. And right before the end of last year, La Mancha, Orion, and Glencore, which were Horizonte's 3 largest shareholders, agreed to a $20 million funding package. This was interesting. It was structured as more senior debt to fund things that as the company tries to figure out a complete funding solution. That debt ranked pari passu with the other senior lenders there. Both Orion and La Mancha land themselves, board representatives, just because of the bloody absolute governance disgrace that had occurred to date. So they clearly wanted a bit more input at the board level there. And when you thought it couldn't get much worse for Horizonte, that cost to complete review landed, or at least a preliminary version of it, and it showed the extent of the capital blowout was worse than disclosed before, and that landed yesterday. It said it's not a 35% blowout, but an 87% capital blowout, and the share price fell another 60% on that news.
I suppose that 60% is not much compared to the 85% it fell previously.
Yeah, look,
in terms of a dollar value.
if you're a shareholder, you're not really expecting a great outcome on your equity at this point, because there's a huge recap that needs to be undertaken now.
So what the capex end up at?
They say $1 billion total. Instead of US 537 that was previously stated. They say not to expect mechanical completion now until the first quarter of 2026. They also say that the ramp-up assumptions were too aggressive before, and they say we should expect an 18-month ramp-up rather than a 12-month one like had previously been factored in. They're targeting a full funding solution in Q2 this year, but more interim funding will be needed before then too. And perhaps the most important detail, Kalgoorlie boy Graham Crew to become the new interim COO at Horizonte, who appeared alongside Karim when we interviewed them last year, I think 7 months ago.
Jeez, they're gonna have fun with that by the sounds. Jesus Christ. What's the takeaways, Ricardinho?
Mate, what a fuck up. This is an absolute giant fuck up, which has destroyed a lot of shareholder value, and a lot of that, I think, unnecessarily so, because you've just had absolutely, piss poor management during the most critical phase of mine. A mining company's life, the most vulnerable phase of its life, and that's building your first bloody mine. Poor communication of costs, poor management of costs, and it's completely eroded the equity value for shareholders. So it's a perfect case study of how to destroy shareholder value when building a mine. The big question is, how the hell did it get so far advanced without any indication there was a massive issue here? That's going to be a big question asked, and I hope credibility follows people when they are responsible for this sort of stuff.
It's not to say that they didn't probably bloody work hard during it, but Jesus Christ, that's what happens when you're MD of a company and you got a lot of different people that own it. Geez, you can lose them a lot of money if you don't execute.
You, as a CFO and a CEO, need to have your finger on the pulse on the costs and finance. And if you don't, and if you mislead shareholders even the slightest little bit about how things are going, that shit comes back to bite you hard.
And bite all the shareholders. Jesus Christ, look how much money they've lost.
Yeah.
Fuck me dead.
And there are like class actions and the likes if at any time you've actually been in breach of your continuous disclosure obligations. So, you got to, play it a certain way. That's for damn sure. Last takeaway here is in relation to the task ahead of Karim, Crewy, and the rest of the Horizonte management there. The biggest task for them is figuring out a way to get the rest of the project finished right. the business is going to have to be recapitalised. The existing lenders are going to have to cooperate and perhaps even take a haircut on the debt. The business is going to need equity put into it, and a lot of it. And the total debt of the pro forma company needs to be manageable, not deathly. And remember the senior debt totaling $346 million. I do think only $140 million of that was allowed to be drawn. The capital structure is murky as fuck with the convertibles in there. La Mancha, Orion and Glencore, as the biggest shareholders, probably realised that their equity contributions up until the point of distress, might be worth very little unless they got some pari passu ranking senior debt with the other lenders, hence the interim funding loan, I think. Orion might have to reduce the royalty to make the economics all work. This is really complicated, and I was reflecting on how bloody hard that job would be to coordinate. And I remembered a quote from Karim himself when we interviewed him 7 months ago, which made me think, well, these are the right people for the job. Let me play it.
Stories where there's a slightly complex capital structure, we're pretty good at that. So that's the kind of stuff. We're very good at working with other people. On G Mining, we worked with Franco. On Horizonte, we worked a lot with Orion, but we also worked with the bank syndicate alongside the management team. Obviously, ACG is really a story about working with Glencore, Stellantis, the SPAC itself, and being able to make things work. So that's the kind of stuff that we're good at.
There you go. They're good when it comes to slightly complex capital structures. They're going to need that skill set in spades to solve Horizonte's situation, and I do not envy their job.
I think this one's a bit more than slightly complex.
Complex, that'll test the skills. Here's the question. Even after constructing and recapitalising, is opening a big nickel laterite project in Brazil a wise thing in this current commodity price?
It's the right question to ask.
The marketing of this one was, as a tier one asset, lowest quartile cost producer, et cetera, but who really knows until these things are in production, Matty?
Yeah. Yes. Right, JD. Iluka. Geez, you went bloody... Mate, as we said, no one understands mineral sands anyway, so she's all yours. Educate me, young sir.
Alrighty, so I'll break this one into a couple parts. They had their full year results come out, so we'll talk a bit about the results and then just see what's going on at Eneabba and ultimately what sort of value is being ascribed to that. So it's been a pretty tough last 6 months. The stock's lost about a third of its value, dropped from the $12-ish to $7-ish. And that's, on the back of a few factors, mainly being the fact that we're in a weaker market for mineral sands. So getting into the other things that stood out from the full year review, their earnings were just down across the board. Operating cash flow came in at a bit under $350 million. They've got this swing production asset for the good times, which is off. It's called SR1, and it's likely to remain off for the rest of the year.
That's one of the kilns down south, isn't it?
Yeah, that's right.
Rutile kiln. Yeah.
Exactly. And that tells you everything you need to know about the state of the market and the state of demand out there. So SR2, the other major operation that they have, that had a big maintenance outage from October until January. They had plenty of capex sunk in across the mineral sands assets. But the good thing about this one is the earnings are derived from a take or pay contract, which was signed just last year. So they've got a bit of a floor on the earnings that they're going to get from there. Now, Iluka also obviously have a 20% interest in Deterra. So they get circa $30 million, going off the last couple of years' prices that comes in every year. That just makes up a portion of the dividend that they distribute on to their shareholders. So
did they through?
Essentially, yeah. They paid $90-ish million in dividends this year, and 30-ish came from Deterra.
So were they on that royalty that come out to create Deterra? Is that how Iluka
that was a demerger of... Iluka demerged Deterra. It was all owned by Iluka.
Righto, I get you now.
They spun it out in its entirety and maintained the 20%
so it was
interest.
Iluka's royalty.
Correct.
And then, I get you now.
So I think the company said the asset is roughly $500 million carrying value on their balance sheet, or the stake that they have in Deterra. So getting into what's going to be spent going forward, excluding Eneabba, Iluka still have $450 million in 2024 alone that they're going to spend. And in terms of production across the various suite of products, it's going to drop massively from 640,000 tonnes to 455,000 tonnes. And like we always talk about, when production goes down, costs go up. Costs are going to jump up 40%
Yeah,
as guided by the company.
Interesting, mate. You know who we haven't heard much of in the mineral sand space of late? Strandline.
No, we haven't. That's what happens when you don't trade for a while and things aren't going well.
Still in suspension.
Yeah, things aren't going pretty. So let's get into Eneabba and what's going on here. So the company, like a few of the companies we've spoken about of late, very quick to point out the impact of inflation straight away. So remember, this one had capex jump 20% above consensus to 1.5 to 1.8 billion. That was the atrociously worded announcement that they put out late on a Friday in the middle of December. So that just was pretty poor form by the company. Now they've come out today and they've said the feed work undertaken has narrowed that range to 1.7 to 1.8 billion dollars. So they're at the high end of an already blown out capex. It's not pretty.
Does that seem like let's say you have your capex estimate, right? And normally your numbers are plus or minus a range. So it'd be like, but your percentage range that it doesn't make sense to me that that you just get more certainty on your numbers and the range narrows. It just makes sense that they would all kind of move in unison, but you would still maintain a similar size range. So I just found that weird. Did you find that weird?
I mean, perhaps more things have sort of been contracted or they've got terms put forward on what the actual prices are going to be.
I hope so.
But we are expecting more on that feed front this quarter. So I had to go back and look at what the original terms were from final investment decision in April of 2022. And the capital costs were 1 to 1.2 billion with first production in 2025. So we're talking about a 60% cost blowout using the midpoints plus a year at least delay. So the question really is, how are they going to fund that? We're talking about $600 million that is blown out. And we know they received a massive government free kick, essentially. That's not lost on anyone.
How much was that free kick?
So it was 1.05 billion in a loan on very favourable terms, plus a $200 million overrun facility if need be, and need will be for them in this case.
So the free kick's the interest, they save the interest. They still have to pay it.
The loan was non-recourse. So imagine that, right? You could default on the loan and the only thing that's collateralized, I think, is the stockpile, which is worth nothing without the facility.
Yeah, right.
Yeah. So Iluka put into this refinery co, this group that was created, which they own, $200 million that goes in on a 1-to-3 ratio with the government's money coming in as well. And the stockpiles and everything went in, as well as they got this phase 1 and phase 2 capital that they'd already sunk, which was minuscule in comparison to what's being spent here.
The overarching question is, will the government provide an upsized facility to fund this capital blowout, or will Iluka have to direct their own earnings or the Deterra dividend that way to fund the balance?
Iluka versus BHP. Who's getting the government money first?
That's the exact right question to ask, Trav. And we haven't had any more insight since December when the cost blowout happened. But I still think it's worth looking at the state of the business and whether they have capacity to tip in more, because it's a pretty significant amount of money. And like I mentioned, they spend a lot of capex and they've guided to a lot of capex ex Eneabba anyway. So they've got net cash of $225 million. Of the 200 that they need to contribute, they've only put in 56. So already 144 million needs to go in over the next couple of years. They do have a $500 million plus undrawn facility at the moment. And they've got a huge amount of inventories. They've got over $400 million in finished goods alone. And, if you go beyond just finished goods, it's over $600 million in inventories. But mineral sands markets are not big. They're not transparent. You've got no idea what's really going on. There's an obvious reason why they're stockpiling the stuff and why they've got it in inventories. It's because they don't want to flood the market and destroy their profit margins.
Yeah,
so,
these niche commodities with opaque markets, when you build inventories, you can't think of them like just bloody bullion on hand. It's not that simple, because you're not going to get the prevailing market rate if you just rinsed it all.
Exactly. So that is a sort of big hindrance for the company, and who knows when they're going to be able to convert that into cash. And we haven't even mentioned the actual economics of the project. It wasn't even a knockout project to start with. Just pulling out one number, the life of mine average NdPr they use in 2021 real terms is US $106 a kilo.
Oh.
When we checked this morning, Matty, it was 48 base.
48, down from 49.
Exactly.
Wow.
So Things are pretty terrible at Eneabba, and
Is it worth anything?
That's the right question. So I dug into a couple of the analyst reports just to see in their sum of the parts valuation what this actually contributes. Now, pre the blowout that we saw in December, JP Morgan had this at 16 cents as a part of an $8 valuation. So pretty minuscule.
Yeah.
And post the blowout, it's a negative 30-cent contribution to the sum of the parts. So
Jesus.
It's just a bloody drag on the business, and they're going to have to clear up and pray, although I don't think it's coming, that the government will be favourable in how the remainder of that capital is split up between the two of them, and also that the NdPr market improves somewhat.
If they can get the facility built, once it's built, it'll be a pretty strategically important facility where you can make a crap load of money when the market is good, because it'll be one of those markets where you have insane volatility to the upside and you have super profits in those periods, and then but those periods won't last forever, and also China can have a lot of influence on those dynamics given the concentration.
Exactly, and that's why it hasn't. Obviously, you got the non-recourse aspect of the loan, but that's why it hasn't been as big of a drag as it might have otherwise been on the stock, because Iluka knows the strategic importance that this asset has. And I mean, the company's quite upfront. The project wouldn't have got built initially. It wouldn't have got the go-ahead without the government support. So
it still isn't built, mate. It might not be built.
I think they've got a bit of power when it comes to negotiating how things go forward from here.
I've got a bit of insight on the FID approval for that one, by the way. I'm pretty sure the announcement that Eneabba was approved with that big free kick from the government happened on the last day before the standing government at the time, federal government, went into caretaker mode. So, you basically kind of had to get your last little announcements out right before you couldn't do any more because the election was right around the corner.
Sounds like they had a bit of power in that negotiating timing as well. But for anyone looking at Iluka now, you're talking about a mineral sands business. You're not really focused on the rare earths aspect, and you're going to be much more focused on how the various commodities in mineral sands do and what Chinese net exports look like, as well as the growth project that they have at Balranald.
Yeah.
That's the one, which comes online in the second half of next year. So that's got a substantial amount of money being poured into it as we speak.
Isn't rare earths become in a declining price environment a very saturated industry? A lot of projects that are pending development. Shitloads.
Yeah. All right, Mount Gibson.
Let's take Brooks Airways to give us a lift up to Mount Gibson for a Ricardinho analysis.
And we
Cool Island. Yeah. Why is it called Mount Gibson? I guess they used to have
It's probably a mountain they chopped off.
I think they used to have some tenure around where Capricorn's Mount Gibson is. Maybe that was it. Anyway, it's bloody not Mount Gibson anymore. It's Cool Island.
Let's check in with our friends APAC and what they're doing.
Mate,
of
talk
course,
about a
substantial shareholders.
Yeah, talk about a company really benefiting from the elevated iron ore price right now. Cash increased $196 million in the half year. The company guiding to a dividend announcement when the full year results are announced in August this year. So you still got to wait for some distributions on that front. And this is all for a company with an undemanding market cap of $600 million. And JD has hashed out the cheap, in quotation marks, trading multiple this company trades at several times. So no need for me to do it again today. But of course, there's always a reason why things are cheap. And for Mount Gibson, that reason is very similar to Metals X. The two companies...
Very, very, very similar.
One difference is the mine life, though. These guys have a very short mine life.
Yeah. They share a lot of similarities, including their major shareholder, APAC. And if you've listened to any of my recent rants on APAC, you'd know how I feel about their influence at the board level of the companies where they are shareholders, combined with their propensity to also secure offtake with said companies, given they have a commodity trading business. So in these half-year reports that were announced today, I went straight to the related party disclosure section, and this is the juicy stuff, fellas.
Read it from the back, Trav. Read it from the back.
Oh, okay. So, note 22. So we've got director-related entity transactions. During all or part of the year, Mr. Lee and Mr. Ferguson were directors of APAC Resources Limited, APAC, which has a 37.4% beneficial shareholding in Mt Gibson Iron Limited. During the period, sale agreements were in place with director-related entities for the sale to APAC of 20% of the iron ore from Kulin Island's available mine production over the life of mine. Pursuant to the sales agreements during the half year, the group sold 557,540 wet metric tonnes of iron ore to APAC. I mean, and you just look at those numbers there, right? Receivables to APAC there are $19 million. Sales revenue to APAC, $97 million. So anyway, there you go. There's why things are sometimes cheap, because your major shareholder might not be completely aligned with other shareholders.
Well said, mate. Well said.
Oh, right, boys, let's go. There's a couple of half yearlies out for the Goldies today. Just rip through what stood out. Some more stood out than others. Silver Lake, mate, as we know, they're in merger, I guess, discussions, or not beyond discussions, binding agreement to merge with Red 5. Mate, net profit after tax, 49.7 million. Still adding cash, old Silver Lake. But still we're waiting for the information out of Sugar Zone. 28.8 million spent on exploration drilling and 3 exploration drives for this half, which is, I guess, when it's for gone into care and maintenance. I think it got paused on the 8th of June from memory. Something like that last year. So 50,000, I think it was a 90-odd thousand metre drill program they put out. They've completed 50,000 metres of that drill program, but not one assay result has come out yet. So I guess the last dedicated Sugar Zone announcement was in June last year. So I guess why would they hold the assays back? Whether it might be immaterial for Silver Lake, you'd say, or they've hit nothing, or they've hit something, and they might be holding the assays back until the merger with Red 5 is done. I think we saw that with, I think Genesis held back they didn't have their reserve. They didn't have a reserve for Ulysses when the St. Barbara transaction was happening.
Yeah,
from
it
memory.
was set to complete on the 30th of June, and then I think in those end of financial year accounts, they published the reserve on everything. It all lined up perfectly for them, but it was all a bit conspicuous, wasn't it?
I know. I guess within 6 months, I'll be wanting to know what the 28.8 million in exploration and drive development in Sugar Zone got me.
I think you're right in your assumptions there, Matty. I think the company might also argue in addition to that they're collating it and they're working on a new mine plan, and that takes a bit of time to put together.
You'll see an extra level of
Still
disclosure.
can get the bloody assays.
In the scheme.
Yeah, they would argue it's not an exploration project, it's a... Yeah.
It is now.
In the scheme docs, Matty, you'll see a real extra level of disclosure in relation to all their projects. So whenever they drop, which I don't know when that will be, but you'll see a lot of information there about the status of both these businesses and the merit of putting them together.
Very, very interesting. Mate, St. Barbara, is it still a ding, ding, ding for you, Trav?
Unfortunately, it is a very minor ding, ding, ding.
Yeah, so, mate, headline, strong balance sheet, cash on hand, 214 million. Geez, doesn't that just bloody, in a good spot.
There's always more to it.
Helps when you cut off your bloody legs, arms, head and genitals to get that cash by giving away your only semi-decent asset, which was losing them money as well. Seems to be making money now, or at least breaking even now under Genesis. But that 46 million is restricted cash for that Atlantic rehab bonds, remember? So the Simberi in PNG, that's still operating, but that Atlantic's Tokoi operation was closed and going into care and maintenance in October last year because they couldn't get the permits for the in-pit tailings disposal. Check out all-in sustaining costs for Simberi, 4,162. That's all-in sustaining. So remember, throw a bit on top for the capital, growth capital and everything as well. Lost 10 million out of Simberi for last half. So they said they've shifted to focus on maintaining a cash-neutral operation. So obviously not there yet because they are still losing money. Now, they're doing this to maintain business continuity. You want to avoid the rehab liabilities and the care and maintenance costs, but doing that whilst the sulfide expansion feasibility project is completed. So interesting to see when, I guess, in PNG you have an operation that has lost shitloads of money to date, how expanding it and pumping more capital in it will make it work somehow, because they've only got oxide mining until FY26, which is apparently going to be operating break even, but still losing money at this stage. And now they're studying whether to expand it into processing the sulfide ores by either ultrafine grinding or so ultrafine grind then leach, or producing a gold concentrate from flotation. So yeah, look, they milled 900,000 tonne of 1 gram per tonne oxide material for the last half, but the resource definition drilling for Simberi is coming back with 37 metres at 1.9, 36 at 2.1. So, but I assume those bits are refractory. So tread with caution, money miners. It's how are they going to make it work with refractory ore? Can't make it work with oxide. It's going to be a bit of bloody challenge. You finance gurus have mentioned this before. 168 million in available cash, but the market cap is 129 million. Check out the rehab liabilities for Simberi and Atlantic, 45 million and 80 million respectively. What is respectively the right word?
Yeah.
Yep.
Yeah.
Yeah. Yeah.
You know, sometimes I just forget what word bloody fucking too many bloody numbers.
When you're on
and
a roll, man.
stocks these days. So yeah, if only someone would buy it for $1, I reckon. You get a bloody 40 mil lift there.
Oh, yeah. Yeah. Similar to Mt Gibson, mate. Things are cheap for a reason.
Yeah, exactly. So I've had a lot of people say, come on and say, say Barbara's trading at a negative EV. Oh, should I tip some money in? I'm like, one, never asked me that. Two, it's probably like that for a reason.
Yeah. The environmental bonds at Atlantic are very, very substantial, and, you know, there's a reason these things are cheap.
You can just see what's going to happen can you see the writing on the wall with an expansion study into sulfides, and imagine if it does get FID and more capital and...
Yeah. You know what would be cool is if gold ripped, like imagine gold just rips another $1,000, right? And then all of a sudden, you know, crap assets sell. So they could sell their crap assets because some punter would want them. Cool, happy days. And then you can return positive money to shareholders. How cool would that
Punter
be?
being the key term.
Hoping gold rips is not a great strategy.
We need gold at least 4,000, and
then we'll be able to sell these things.
Every company we've ever spoken about could have the strategy that their commodity rips, and then it'd all be good. Everything would be fine.
Righto, speaking of bloody companies that do rip, that have ripped.
Here we go.
Mate, Verify. Geez, they're ripping and tearing. Mate, InvestorHub, DSI, Underground, SMEC Power and Technology, McMahon Mining Title Services, Anytime Exploration Services, KCA Site Services, Brooks Airways, and
K-Drill
just ripping rods out of the ground. Bloody brilliant.
Hooroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.